Welcome to Investors Insights. Our topic today is carving up inflation. It's only appropriate that we chose that topic as we approach Thanksgiving Day and everyone gathers around their Thanksgiving celebration at the table, ready to carve the turkey. We think we have some data and information you need to know in relation to your portfolio and financial blueprint. With that, I've just come out of a great meeting with my colleagues, Trey Booth, Ty Miller, and Bobby Norman. And as always, on Monday mornings early, we exchange ideas, research that we've done over the weekend in relation to market performance last week and the previous vlogs that we've done as we've tracked the market throughout the 2022 year. So, Bobby, you started us off talking about consumer spending and also where they are financially. Talk a little bit to us about that in relation to inflation and carving up inflation.
Yeah, so as we head into the Thanksgiving holiday, we're also getting closer to the big spending day, Black Friday. And so there are a lot of different thoughts about how strong this Black Friday will be as consumers are still dealing with high inflation. And one interesting note is that the consumer credit defaults are still really low and actually falling. And as you can see in this chart from the New York Fed, consumer credit defaults is at a record low of 5.7%. It was 14.6% into the 2008 recession. And one of the hallmarks of a recession is a rise in consumer credit defaults, and basically resulting in a rise of third-party collection activity. And as you can see in this chart, that is not happening yet. So despite record high credit card balances being carried by the consumer, the rate of default is comfortably low. And this is a good sign for holiday spending and the economy, at least near term.
And with that, Trey, you brought in the fact, hey, based on what Bobby's saying, I just need to highlight about the Thanksgiving dinner, an economic indicator within itself. Talk about that.
Yeah, thanks, Greg. Yes, before they get to Black Friday, I think some consumers may be using a little bit of that extra credit on Thanksgiving dinner itself this year. We saw a 20% increase in the cost of the average Thanksgiving dinner. This is produced by the Farm Bureau each year. We watch this just as we think it's a neat indicator to see where prices are this time of year. No surprise there that inflation has found its way all the way to the Thanksgiving table. But a 20% increase was a little higher than we expected. A lot of that came from the turkey, which was up over 21%. And so the average price of a Thanksgiving dinner went from $53.31 up to $64.05. That's just over a $10 increase. $5 of that $10 came from the Thanksgiving turkey. So if you can maybe adjust to ham, you might have might be able to save some of that excess credit for Black Friday spending. So, but just kind of if you're thinking about going out and getting ready for Thanksgiving, you might go out with a little extra dollars to prepare for that family meal this year.
Yeah, that's well said. So we need to carve the turkey or the ham, but we also need to carve up inflation. And throughout our blogs, we've been talking about where inflation is in relation to the economy and the markets. And Ty, you gave us good news this morning in regards to we're still seeing weakness in inflation. Talk about that.
Yeah, well, first of all, Thanksgiving to me isn't the same without turkey, so I will not be adjusting the ham tray. Thanks for
You'll pay up.
Yeah, definitely paying up.
I'm coming to your house for dinner, Ty.
Sounds good. We'll have it all. But, we got CPI a few weeks ago. We talked about that. We told you it looks like inflation has peaked. We got further evidence of that last week with PPI. So that's the producer price index. Those are the prices that the producers are paying. Of course, the CPI is the price that the consumers are paying. So producer price index up 0.2% in October. That was less of an increase than was expected. As you can see in this pretty simplistic chart, prices for the producer have really fallen off a cliff. Anybody could read this chart. You see goods inflation was up 10.5%, services up 6.3%. That sounds terrible, I know. However, goods were up 11.3%. So we went from 11.3 down to 10.5. Services was 6.6. We went down to 6.3. Prices are coming in. One area that we would like to see is, as Trey alluded to, the food inflation. That was actually up a little bit. We would like to see that come in. Of course, we all go to the store. We know what we're paying there. Energy has pulled back some, so that's a good spot as well. For further evidence of a peak inflation, the Fed, all these rate hikes they're doing typically work with a lag. So we expect these numbers to continue to come down as we end the year and get into next year. But we can only, wait for the data to tell us.
Yeah, we would love to see food costs come down, and of course, energy prices come down as well. That impacts everybody's wallet. And as we go into the Thanksgiving holiday, it'd be nice to see that continued decline by year end and into 2023. So, folks, let me tell you this. You've just heard some great information and research from my colleagues on portfolio strategies. And this morning, we gathered together as a team and just talked about all the things we're thankful for. Yes, every day, each and every day, we're watching the markets and portfolios and financial blueprints. But you need to know that it was, without a doubt, everyone in our organization is thankful for those clients and their families who have believed in us, not only this year, but through the years. And we greatly appreciate that. And we want each and every one of you to have a great Thanksgiving holiday. And just know that every day we're here at Five Plan Partners striving to see to it that our clients have better, richer, fuller lives. We thank you. We're honored to work with you. Happy Thanksgiving. And we look forward to bringing you additional news and maybe carving up inflation by year end. Thanks.